Good morning. Welcome to our third blog on European small cap equity funds. I suppose from our last blog, things have changed very dramatically. As you know, as many of you regular listeners will be aware, we at SW Mutual Capital are very much fundamental investors, very much stock picking approach. And I suppose probably a month and a half ago, it seemed as though this was going to be almost the perfect environment for this approach. But I guess this has all dramatically changed over the last month and a half with the sovereign debt crisis in various peripheral countries in Europe, starting in Europe, in Greece, moving to Spain, concerns over Portugal, Italy. And I suppose, so I think one thing we've been very careful with our portfolios is looking at it country risk. Obviously, the portfolio is constructed very much on a bottom-up stock-picking approach, but we really have to justify why we own our Spanish stocks, why we own a Greek stock, why we own quite a lot of Italian stocks. And so this has been a very negative force. The markets have corrected very dramatically. But I suppose on the other side, there's an equally hugely powerful force. The economic recovery is really taking hold. And we're really seeing this now appear in corporate numbers as well. Just as an illustration, consensus estimates for European GDP for 2010 a year ago were for 0.25% growth. This is now 1.25% growth. And I think, whilst with GDP growing like this, some companies are going to be growing their top line, and it's really our job as stock pickers to find those companies. And, the margin and the cost taken out in corporate Europe is unbelievable. In 2003, margins troughed at 8.1%. And now they're going to trough at 11.4%. So you combine this top line growth with this huge operational leverage and cost that's been taken out, and we can get an absolute explosion at the bottom line. And it's very interesting. I think, over the last month, investor sentiment has just totally disintegrated, even from quite a low base. And only 40% of people expect European companies to grow their earnings this year, which is just ludicrous, really. And that has fallen from 75% a month ago. And we've spoken before of the revulsion of equities. The large insurance companies, the private banks, all having all-time historical low holdings in equities. And I suppose the other thing is everyone hates Europe as well. So European equities are hugely out of favour, and actually probably therein lies the opportunity. But our conversations with the companies have really shown that top-line growth is appearing. And we've often talked before of whether this is just inventory rebuild or actually real end demand, and I think there's definite sign of real end demand. And I suppose the economic recovery could take even greater hold. Business confidence is returning, is above long-term averages now. And what this means is that factories that have been mothballed are now being reopened, capex is starting to return. And as long as I suppose the woes in the EU and the European governments doesn't affect business confidence at the boardroom level, these projects will continue and be, I suppose, the next leg up in the top line growth. And so I think what we're finding is out in the world some wonderful stock opportunities, and particularly looking through the carnage, I guess, of the last month. But I suppose at the actual portfolio level, it's very difficult when you've got these two very powerful forces pulling in different directions. And particularly when one of them, the whole economic situation is very unclear. And I think in times of this sort of lack of clarity, it's probably best just to be a little bit more conservative, take a bit of risk off the table, which is what we have done. But I think as soon as we get some more clarity, a bit more confidence returns to the market, then we could have a very strong rebound from here, we believe.